Hey, what's up guys? John here. U.S. executives, CEOs, multimillionaires, and billionaires are liquidating stocks.
Growing cohort of billionaires and CEOs are unloading stock and at an increasing pace.
At levels in which we have not seen in over a decade. On top of this, nearly 1,500 CEOs have recently stepped down.
More than 1,500 CEOs have stepped down from their posts this year, according to a report by Challenger GreatCreditFast.
This is the highest since 2002, in the last 22 years. So you think about this. The wealthiest and the most powerful business titans are liquidating at the top of the market. A lot of them are stepping down from their roles when times are good. And why? What's really going on? What's going to happen next? It's the big question. But when you line up the facts and you look at things very, very clearly, you'll understand where we're likely going to be going. I think the next 3 to 6 months in this country, things are going to get absolutely out of control. And a lot of people in high positions, they want to lock in their gains right now so they can buy when things hit the fan. It looks like that's what we're walking into. This video, I'm going to break it down and show you exactly what's going on. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on in the U.S. economy. And today's video is sponsored by ITM Trading, but more on that in just a little bit. Take a look at this. So, breaking. U.S. executives are dumping stocks at their fastest pace in at least 10 years. The percentage of publicly traded firms seeing net purchases from their officers and directors dropped to 15%. To put this into perspective, the 10-year average of the metric is 26%. After a historical run higher, corporate insiders are taking profits on their own stock. Well, Challenger GreatCreditFast did a survey, and they found that more than 1,500 CEOs have left their post so far in 2023. So at the end of 2023, or in the mid of 2023, they said it was 1,500, and then that number's only continued to grow. 180 CEOs leave their post in March of 2024, highest quarterly total on record. The number of CEOs changed as U.S. companies fell 27% to 180 in March from the record high of 248 in February. It is up 29% from the 139 CEOs exited the same month last year, according to a report released Thursday by global outplacement business and executive coaching firm Challenger GreatCreditFast. Same company did the former survey. Said March's total is the highest for the month since they began tracking it in 2002. So you think about this. They're liquidating, selling tons of stock. Even CEO of Snapchat, Evan Spiegel, not a single purchase, 1.7 billion in sales. And this is all happening right at the height of the market, 2022, 2023, 2024, just liquidating. And it's not just him. I mean, you have Bezos, you have Leon Black, Zuckerberg, Jamie Dimon, the Walton family. I mean, all of these people, they liquidated $11 billion in stock. $11 billion recently. And they've continued to add to this. I mean, Salesforce, insiders selling 150 million, just in the this is 3 days ago. Corporate insiders dumping. Moderna selling 3.3 million in stock. NVIDIA selling, just liquidating tons of stock. But the big question is why? What is actually happening? Where are we going? Well, I've made a prediction on this channel in 2023, in December, and said we are not going to see a Fed pivot. We're not going to see one. Not anytime soon. Back then, a lot of people thought we were going to see it early in the year in 2024. And every meeting they say the next one we're going to see rate cuts. The next one we're going to see rate cuts. I don't think we're going to see it all year. I think we're walking into something really, really, really concerning. I mean, just look at the inflation report. It just came out today, July 26th. Fed key inflation gauge rose 2.5% in June from a year ago, easing path to rate cut. Right? So the personal consumption expenditures price index increased 0.1% in June and was up 2.5% from a year ago, with the annual rate showing a slight decline from the prior month. Remember, they said that the target is 2%. They want to get to 2%. An important gauge for the Federal Reserve showed inflation ease slightly from a year ago in June, helping to open the way for widely anticipated September interest rate cuts. The personal consumption expenditures price increased 0.1% on the month and was up 2.5% from a year ago, in line with the Dow Jones estimates the Commerce Department reported Friday. The year-over-year gain in May was 2.6%, while the monthly measure was unchanged. Fed officials used the PCE measure as their main baseline to gauge inflation, which continues to run above the central bank's 2% long-range target. Now, I think they're going to continue to kick the can down the road. Now, many people might think, okay, they kick it down the road, the economy, is probably just going to gradually get worse every single month. Well, I would say things are going to likely go from bad to worse almost overnight. Because you think about how much money, how much debt these banks owe the Fed. I mean, they borrowed $165 billion in debt. They owe 1,804 banks owe this money back inside of the next 9 months. Consumers are being strapped. I mean, they're in really big trouble. And so what I think is going to happen is we're going to start seeing banks greatly contract on lending. I think we're going to see a lot of commercial real estate going completely bust. We're going to see a lot of people getting completely wiped out over this. A lot of real estate syndicators, people across the board are in really big trouble. Even Jerome Powell said that commercial real estate, he says, get ready, commercial real estate. Harvard Business Review came out 3 days ago, says U.S. commercial real estate is headed towards a crisis. U.S. banks face a reckoning. Over the next 2 years, more than $1 trillion in commercial real estate, and over the next 3 years, it's closer to $2.2 trillion. So they're underselling this. That's 10% of all commercial properties, all commercial debt in existence. You think about that. Multifamily 5 units and above, office buildings, you look in industrial property, farmland loans, all commercial loans. All of these loans, 70% of these banks are regionals holding this debt, right? 70%. It's $2 trillion, right? So here they're saying that it's $2 trillion from now until 2025. So you think about that. Regionals are already in really big trouble, and 70% of that $2 trillion, so about $1.6 trillion, is held by these banks. And they're going to keep interest rates higher for longer. And what interest rates staying high does, it greatly reduces the value of these assets because the assets are producing less revenue when the high debt is factored in, right? Plus, insurance and taxes are continuing to go up. This is just an absolute bloodbath, and I think we're walking into a perfect scenario. Because if you think about how jaded the everyday American is now, because every day, 2 days, 3 days, we're hitting with some insane story. Let me just give you a quick recap of what's happened. We'll call it the last 2 weeks. You have this major outage that really hit all airlines. Major airlines, medical facilities, businesses, police forces around the world were hit by this. The Microsoft, right? And it was with CrowdStrike. And this was only 7 days ago. This was 7 days ago. People have already forgotten about it. No longer even spoken of. Today, this was yesterday actually, North Korea charged with cyber attacks on U.S. hospitals, NASA, and military. People don't even really talk about this. You have a Scotia Bank. This came out today. Customers report not receiving payroll deposits. Then, you have this situation with, we've all seen, this was the biggest story in the world for about 48 hours. Now no one's even talking about this. No one's even talking about it. And so whether you have an opinion about it or you don't, but it just goes to show a major event, like any one of these events that I just listed off 10 years ago, people will be talking about this for years. Now people forget about it in a day. And so as consumers are so jaded and as these banks are so levered, we're going to see a scenario where we're going to start seeing a lot of these banks topple over. And I think that, consumers are a place where they'll just forget about it and they'll just continue to normalize as these bigger banks, JP Morgan, Bank of America, Wells Fargo, they start consolidating and gaining more and more market share. And with it, I think we're going to see a lot of change with freedom for America. Next 2, 3, 4 years, things are going to get absolutely insane. But follow the next 6 months, and that'll set the path for everything else that's coming. Now, a lot of people are believing that we're going to see this rate cut next week. I'll bet almost anything that we're not going to see a rate cut next week. We'll probably see rates stay exactly where they are. And then we'll see a conversation of, after the election, maybe someone's got to cut rates and maybe the economy will start booming. But remember, it's been a conversation for 2 years about rate cuts. 2 years, not just last year. A lot of people are anticipating rate cuts all the former year, 2022. Where are we at now? We're not going to see them. We're not going to see them. This is the time to put yourself in the best position because most people aren't. Most people are to the lever. They're levered with debt, consumer debt, auto loan debt, credit card debt, mortgage debt, business debt, I mean, just across the board, across the board. And so what I think is going to happen is I think we're going to start to see a lot of people flocking into farmland, a lot of people that have money. I mean, you think these wealthy executives are just sitting in dollars with record high inflation? I don't think so. I think they're buying farmland. I think they're buying precious metals like gold and silver. I mean, look at what's happened with gold recently. I mean, it's shocking. Normally the metal barely moves, but the last 6 months or so, more and more people that would never have purchased gold are buying gold. Why? It's because it's a hedge against risk. That's what it is, hedge against risk. And so why are investors buying gold? And by the way, some of these investors are, Ray Dalio, David Einhorn, John Paulson, Jacob Rothschild, right? And many more. But why are they doing it? Well, most investors largely consider gold as a defensive investment. It offers some protection against risk like inflation and a weak US dollar. During times of inflation or currency weakening, investors flock to gold as a reliable store of value. Gold also protects against geopolitical uncertainty, shifting winds can rattle currencies or create a trade war or real wars, spooking investors into the perceived safety of gold. Many investors believe gold shares have a negative correlation with stock market, that it trends to rise in value during stock market corrections and crashes. However, some academic studies question the assumption. In short, investors treat gold like a hedge against risk. Gold doesn't produce income, however, so its value lies only in investors' perceptions of that value. Now, what's going to happen? What's going to happen? Well, I think we're going to see a rush, an absolute rush into gold over the next 6 months to a year. That's what I'm betting. Next 6 months to a year, probably from now really until 2030. I think we're just going to see more and more people investing in gold, actually taking possession of it, not investing in gold and letting someone else hold it. I'm under the belief if you don't hold it, you don't own it. But that's what I think is going to happen. I think we're going to see a lot of people investing in precious metals over the next few years. What do you think about this entire situation? Where do you see all of this going? Do you think we're going to see a wave of bank failures throughout America? Do you think we're going to see banks greatly pulling back on lending? And do you think we're getting basically perfectly positioned for a major black swan event? I think so. If you're interested in learning about investing, I'm always also under the belief that the more information you have, the better decision you can make. If you're interested in learning about investing in gold or silver, you're interested in positioning yourself a little bit into precious metals, you should hit up ITM Trading. There are a bunch of really great people over there, and they offer a lot of assistance, and they've done an incredible job for countless clients all throughout the country. So if you're interested in learning about precious metals, gold and silver, you can click the link in the description just below this video, schedule a free call, and catch you next video.